Welcome back to another session with Dr. SAP. Today, we're tackling a situation that every financial professional faces sooner or later: posting an invoice directly in financial accounting. This approach is essential in specific cases where we bypass the usual procurement workflow. Typically, businesses process invoices through what we call the three-way match. In this standard process, someone requests a purchase order is issued, and a goods receipt is recorded before the invoice is posted. It's a tried-and-true method for ensuring control and compliance. But there are exceptions. Imagine an urgent scenario. Let's say a piece of equipment breaks down, and a repair service is performed immediately. There's no time to create a purchase order in advance, yet the invoice must still be accounted for. Or perhaps it's a tax payment or fine that doesn't require prior approvals. These are the moments when we use direct postings in financial accounting, and that's exactly what we'll explore today. Using the Create Supplier Invoice app in Fiori, we'll record this type of transaction efficiently and accurately. Along the way, you'll see how to assign the expense to the appropriate general ledger account and a controlling object, ensuring compliance and seamless cost tracking. By the end of this session, you'll have a clear understanding of how to handle these scenarios, leveraging Fiori's intuitive interface to maintain consistency across your financial records. Let's get started, shall we? Navigate with me to the Create Supplier Invoice app, and we'll begin by entering the supplier and invoice details. In the main menu of Financial Accounting, we can see the key navigation options. Our objective now is to post an invoice directly in Financial Accounting, addressing an emergency situation where no prior purchase order exists. This process bypasses the standard workflow involving purchase orders. We select the Create Incoming Invoices option, highlighted in the menu. This functionality allows us to post invoices directly in the Accounts Payable module, which is particularly useful in cases where services have already been rendered and no additional approval is required, such as emergency maintenance. On the invoice entry screen, we prepare the fields for input. This interface uses the classic layout, distinct from modern Fiori applications, yet it provides all the necessary functionalities. We will start by entering the supplier and invoice date. We begin by entering the supplier information. In this example, the supplier ID is entered directly into the designated field. This is the first step in linking the invoice to the appropriate vendor, ensuring accurate accounts payable records. We proceed by entering the invoice date to ensure that the transaction is recorded in the correct fiscal period. Users can utilize the calendar icon to easily select the date, minimizing manual errors. The calendar pop-up is displayed, where the user can choose the appropriate date. In this case, the current date is selected to match the posting date. Once confirmed, the system will register the date for the invoice posting process. Here, the invoice date has been confirmed, aligning the posting and invoice dates to ensure accurate financial records. This step also facilitates better compliance with company policies and tax regulations. The system retrieves supplier-specific data, such as the address, IBAN, SWIFT code, and payment terms. These details are automatically filled, streamlining the data entry process and reducing potential errors. Ensure all fields are reviewed for accuracy. We proceed by entering the invoice amount in the designated field. In this example, the total invoice value is €110, including a tax amount of €10, 10% tax rate. This breakdown ensures the transaction is recorded correctly and facilitates proper tax reporting. The tax amount is calculated and displayed as €10, which corresponds to the 10% tax rate applied to the total invoice value. This ensures proper tax treatment in accordance with regulatory requirements. Review the tax amount to confirm accuracy. In this step, we begin to search for an appropriate general ledger (GL) account to classify the maintenance expense. The search criteria are entered in the GL account field, and the system retrieves relevant account options based on the input. A list of available GL accounts appears, presenting options aligned with maintenance expenses. In this example, the account 6300000 machine and equipment maintenance is chosen as it accurately reflects the expense type. The selected GL account machine and equipment maintenance is now displayed in the table. This step confirms that the account chosen accurately represents the nature of the expense incurred. The amount of €100 represents the net expense allocated to the cost center. This value, shown in the amount in doc, excludes taxes and reflects the net cost associated with the maintenance service. The system displays a detailed error message, indicating that the selected GL account machine and equipment maintenance requires an assignment to a CO object, such as a cost center or order. Follow the outlined procedure to resolve this issue. Closing the Performance Assistant window allows us to address the error by identifying the correct input column for CO assignment. This step is essential to ensure the transaction complies with the system's validation requirements. The CO assignment column is located, allowing us to specify the relevant cost center. Assigning this ensures compliance with cost management policies while resolving the validation error. After identifying the CO assignment column, the appropriate cost center, CC001, is entered. This step ensures the transaction is accurately linked to the relevant cost center for reporting and control purposes. With the cost center successfully entered, the system revalidates the data. The absence of any further errors indicates that the transaction is now compliant with both financial and controlling requirements. The completed entry displays all required fields, including the correct cost center allocation. The invoice can now be processed without errors, ready for posting or further actions. With all required fields completed and validated, we click the Post button to process the invoice. This action finalizes the entry, ensuring it is saved in the system for further reporting and payment activities. The system confirms that the invoice was successfully posted by displaying a unique document number in the bottom left corner. This number serves as a reference for future inquiries and reconciliations. We return to the main menu to start a new analysis. This menu provides access to the key functionalities of the system. Our objective now is to run the trial balance report to review the impacts of the invoice posting completed earlier. The home screen displays the applications previously saved with custom filters. These shortcuts enable quick and efficient access to essential functionalities, including the trial balance report. Selecting the trial balance with CO Objects application enables us to analyze account balances impacted by the earlier posting. These include accounts payable, tax amounts, and expenses allocated to CO Objects. In the trial balance screen, we expand the navigation panel to gain a better overview of the available fields and dimensions. This step ensures we have full visibility of all accounts and cost center allocations related to our posting. Here, we adjust the filters and measures in the trial balance report to display the balances associated with the company code and profit center. This customization allows us to focus on the specific details of the transaction previously posted. The trial balance now displays the updated results, reflecting the account balances after the invoice posting. We can clearly see the impact on accounts payable, tax amounts, and expense allocations for the selected cost center. The trial balance report highlights the total accounts payable resulting from the invoice posting. The selected GL account reflects the consolidated payable balance for the organization, aggregating amounts from multiple vendors through its role as a reconciliation account. Here, we observe the corresponding tax amounts recorded in the trial balance. These taxes are not classified as expenses but are recoverable in subsequent processes, reflecting accurate tax management practices. The maintenance expense of €100 is also clearly shown. This adapted trial balance report not only highlights the integration with controlling CO, but also displays cost center allocations along with corresponding financial data. The report consolidates financial and controlling information, providing a holistic view that enhances understanding of cost management and process integration. In this step, we drill down into the €100 maintenance expense line item to analyze its details further. This action allows us to explore the specific posting and understand its implications for cost center allocations and financial tracking. The Navigate to function is used to explore the details recorded in the General Ledger (GL) for the selected line item. This functionality provides quick access to in-depth financial insights and ensures traceability of recorded transactions. In the Display Line Items in General Ledger screen, we observe the detailed posting information, including the journal entry number, posting date, and clearing account. This screen offers a comprehensive view of the individual line item, making it easier to analyze and verify transactions. Next, we click on the journal entry number to further explore the associated details. This action provides access to the Manage Journal Entries screen, where we can view the complete document and its individual line items for additional insights. On this screen, we focus on the details of Item 2, which corresponds to the €100 maintenance expense. This view highlights the information contained in the journal entry, ensuring clarity on the recorded transaction and its allocation to the appropriate cost center. Here, we delve into the specifics of the maintenance expense posting. This screen provides detailed information on the €100 expense, including the associated tax codes, cost center, and functional area, allowing for precise financial tracking and reporting. To return to the complete document, we select Back to Journal Entry. This action provides an overview of all line items associated with the journal entry, offering a broader perspective and ensuring all components of the transaction are reviewed for accuracy. Now we have a comprehensive view of the journal entry, including accounts payable, tax details, and the recorded expense. This screen also highlights options for editing, reversing, or further analyzing the transaction, emphasizing SAP's flexibility for financial management. In the T-account view, we can see the accounting impact of the journal entry. This screen visually organizes the debits and credits, enhancing understanding of how the transaction flows between financial accounts, such as balance sheet and profit and loss accounts. Lastly, this figure provides an overview of the accounting impact for the maintenance expense. By analyzing the T-account view, users gain a clear understanding of how the transaction affects both balance sheet and profit and loss accounts, concluding the financial review process. This figure highlights the relationship between detailed journal entries and their representation within the balance sheet structure. The focus is on positioning three accounts: taxes, accounts payable, and maintenance expense, to ensure a logical financial flow. As a next step, we transition back to the main SAP screen to explore the financial statement application. Here, we return to the SAP main screen and select the financial statement application. This transition emphasizes how SAP allows us to seamlessly switch between granular transaction details and high-level financial overviews. Upon accessing the financial statement application, the system loads predefined parameters that align with the journal entries reviewed earlier. This ensures the seamless connection between the high-level financial summary and the granular details we previously analyzed. As we navigate into the balance sheet structure, we begin by observing the categorized view of accounts. This step introduces a hierarchical arrangement that enhances our understanding of the financial data distribution, from assets to liabilities and equity. Expanding the Assets folder, we locate subcategories that include both short-term and long-term components. In this view of the balance sheet, we focus on the tax-related account displaying a balance of €10. This value reflects the impact of the previous journal entry, illustrating how tax postings influence the financial structure. In this step, we close the previously explored folders to simplify the view and shift our focus to the liabilities section. This action prepares us to dive deeper into the analysis and locate the accounts related to the process initiated with the invoice posting. Here, we expand the liabilities folder, progressing through the balance sheet hierarchy. This step is critical for identifying detailed components, such as capital and reserves, which directly connect to the financial accounts under review. Next, we proceed to open the payables folder, beginning to observe the detailed structure of accounts payable. This granular level of detail helps us understand the connection between the journal entries and their impact on the balance sheet. We then expand the subfolder Residual Maturity less 1 year, where we identify short-term liabilities. This refined view brings us closer to pinpointing the specific accounts payable entry generated from the invoice posting. At this stage, we observe the total invoice amount of €110, now displayed in the accounts payable, representing our liability. Next, we will examine the net value of €100, assigned to the profit and loss account. Here, we close the payables folder to streamline our view and prepare for the next action. This step narrows the focus as we move on to exploring other components of the balance sheet structure. Next, we open the profit and loss folder to examine its hierarchical components. This action shifts our attention from liabilities to income and expense accounts, setting the stage for further analysis of financial movements. Expanding further, we navigate to the annual and incremental loss section within the payables hierarchy. Here, we uncover the positioning of key accounts, solidifying the connection to prior financial operations. Continuing the exploration, we open the operating income folder. This step reveals an organized breakdown of income-related accounts, linking them to underlying business activities and supporting financial transparency. Finally, we locate the maintenance expense account associated with the invoice posting. This discovery completes our exploration of key accounts, linking the accounts payable entry, taxes, and maintenance expenses. This step provides a comprehensive understanding of the financial transactions and their alignment with the balance sheet. Taking advantage of this review, we also examine related expense accounts, such as personnel expenses and material expenses. Together, these accounts present the total costs identified so far, encompassing both personnel and machinery expenses. These insights will play a crucial role in future production costing analyses, providing a foundational understanding of cost allocation. Returning to the initial screen, we use the back command to navigate back to the main overview. This step helps reset the focus for the next analysis stage and provides a clean starting point for subsequent exercises. Congratulations on completing this session with Dr. SAP. Today we tackled a real-world scenario, posting an invoice directly in financial accounting using the Fiori interface. Together, we explored situations where this approach is necessary, like urgent maintenance or tax payments, and saw how to handle them efficiently while ensuring compliance with financial and controlling processes. By leveraging the Create Supplier Invoice app, we demonstrated how to seamlessly integrate expenses with general ledger accounts and controlling objects, ensuring accuracy and consistency across your financial records. This not only streamlines your processes, but also strengthens your organization's ability to manage costs effectively. Remember, SAP is all about flexibility and precision, and you've just mastered another critical tool in your financial management toolkit. As always, I encourage you to reflect on how this process could apply in your own organization and continue exploring the endless possibilities within SAP. I look forward to seeing you in our next session, where we'll dive even deeper into SAP's powerful functionalities. Until then, keep learning and growing. This is Dr. SAP signing off.